you need both of them. You do. But just because I pick up this or I pick up this or whatever it is that I pick up, it's because it's gold and silver. So I'm not saying this is not, I have a well-diversified metals portfolio. You need to be diversified. And I can't sit here and tell you exactly what you need because I don't know what your goals are. I don't know what your circumstance is. I do know what the global circumstance is. And you need to have gold. But that's why you have the individual consultants there. Because they can help you customize that strategy. That's what you need. And you need it as quickly as possible. Russia and Ukraine are the single largest commodity exporters in the world. So this is real stuff. Russia, while only 5% of the world GDP, is financially deeply interlinked. It used to have 500 billion of FX, which is foreign exchange reserves, and owes about as much in debt to the rest of the world. We looked at that just last week. Not to mention off-balance sheet debt that it owes to the world through derivatives. When spot commodity prices rally, in other words, go up like they do now, it's a bit more complex to de-SWIFT Russia than it was to de-SWIFT Iran, who's much smaller. And again, Russia is arguably one of the largest commodity, hard asset, real stuff exporter of the world. But when they're turned into a financial product like the spot market is a contract that controls the underlying asset, but there's unlimited amounts of those, very limited amounts of these, of the real thing, whether it's oil or nickel or wheat or anything that is physically real. Leverage and liquidity are also important. In 1998, we had Russian bonds and a leveraged long-term capital management, LTCM, we've talked about a gazillion times. In 2008, we had mortgages and leveraged banks and shadow banks, which are shadow banks are banks that do some of the functions of banks, but they do not take in deposits. Right? That's what a shadow bank is. So an insurance company could be a shadow bank. A mortgage company could be a shadow bank, right? But we've talked about long-term capital management was the first derivative implosion. 2008 was the second derivative implosion. In March 2020, we had leveraged bond basis trades. I don't think that's quite yet the third one. I think the third one is coming up, and I think it's going to be the mother of all derivative implosions because that market's so much bigger. Commodities are collateral, right? No counterparty risk. Gold is the only financial asset, this is not according to me, this is according to the Bank for International Settlements, the only financial asset that runs no counterparty risk. Safest thing you should do. I hope you have a lot of it. Whatever the world does to Russia, well, it could be a very much of a tit for tat, and that's what Russia's talking about right now. You're going to cut us out of the exporting or taking our commodities, our oil and natural gas. Maybe we'll just shut you off because what we've just been talking about it and talking about it and talking about it, well, you know, it's not like Russia doesn't have tools at their disposal, and it impacts everyone. Because again, commodities are collateral. Look at everything that you're buying. So when you hear Fed Chair Powell say, yeah, well, the inflation's going to go down the second half of this year. Garbage, garbage, garbage. He's still on the transitory wagon, and it's not true. Open your eyes and look and get ready, please. I hope you're already ready. If you aren't, get ready now. And what are you going to do If the wealth that you're holding in these fiat markets, if they say no, what are you going to do? There is nothing you can do. Gold held at home runs no political risk. I mean, please. So that's what they're going to do. If enough people go to pull their funds out of these mutual funds, these ETFs, the money markets, and all of this, they will simply say no, and there will be nothing you can do. UK announces ban on Russian oil imports. Okay, we announced a ban today too. President Biden came out and talked about it. So we have oil now trading near the 2008 crisis. As you can see, we're not all that far off, and it did get above $130 a barrel today. And this is what everybody is talking about. The LME halts nickel trading after unprecedented 250% spike. And if you're not prepared, if you don't at the minimum have proper diversification into gold, when they cut you off, there's not anything that you can do. Not anything. Now, why does nickel matter so much? Well, because, it's crucial for making stainless steel and electric vehicle batteries, and isn't all the talk about electric vehicle batteries and other things. It's an important commodity. Now, did the physical metal expand that much overnight? No, but the contracts can. And they can also short them. In other words, sell contracts that on nickel that they never intend to own. It's just a paper market. It's a contract market. This is not the time to be in paper. They talk about the rush to cash, but what all of this inflation is showing you and what it's in reality doing is that it is reducing its this cash purchasing power value. The true rise in the price of gold that we're waiting for, that I'm waiting for, is when they do those revaluations. So what all of this is, as I told you before, that it felt an awful lot like this was the beginning of the hyperinflation. And I think that that's what's unfolding right now. And the war is just a justification. And they have no tools. The only tool that they have is more of this. Is that going to help? No, but they don't have any tools. They don't have any tools.